All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and we're going to do a little quarterly update on Alibaba. It's a position that both Dylan and I are in. We get some interesting news over the last, last week they published at the end of their fiscal year 2021 earnings. So we're going to get a little update on the company and what everything's going on there, and see where they are positioned in terms of moving forward after they had to pay that $2.8 billion fine to the Chinese government. That's pretty much it.
Cool tip.
Yeah, exactly. So, this I thought this was kind of an interesting. This is the title slide from their earnings presentation. All like the different kind of little ventures that Alibaba has. It's a good encapsulation, I think, of a lot of their mascots. I guess it's interesting.
I thought it was like a Disneyland thing or something.
No, they're trying to show you like just how ridiculous this company is.
Wow.
This slide right here, kind of same idea, just a little less cartoony. But they're showing you like all the different subsidiaries within Alibaba and like what portion of like the revenue that they're responsible for. Alibaba is a ridiculous company. The more I look at it, the more like little niches are hidden within it. Which is definitely interesting. They have like such a I want to say like a flywheel effect, because I don't know if you realize this, Dylan, but like Alibaba is very active in terms of being an investor. They invest in a lot of other companies, and then they ultimately acquire a fair number of them. And that's where this kind of growth through acquisition comes from too. I can't even begin to like wrap my head around, the complexities of this business in many ways, which Warren Buffett would say, if you don't understand it, you probably shouldn't be investing in it. Touche.
Except didn't Charlie Munger just invest in it?
Yeah, we're going to talk about that here in a second. So this is why I'm attracted to this business, because I mean, do you see this column over here? This is the year-over-year growth in their revenue. Insane.
Wow.
It's like firing on all cylinders. That every like aspect of this business would be a terrific business on its own.
Yeah, this is wild.
Yeah, like these numbers are just ridiculous. And like, Dylan and I just kind of did our FUBU video, and it's like, yeah, they're growing over 100%, but they're growing, pie this big. Alibaba is growing a pie this big at like this ridiculous rate. I can't even get my hands like,
jeez,
this green. And then if you look at this, the EBITDA growth down here with that the green arrow highlighted, 24% growth in EBITDA. Yeah.
I just kind of always equated them to the Amazon of China, just because it was easier for me to understand.
Yes, that is a reasonable way of looking at them. But they're more than just that. They have like the traditional kind of retail like Amazon does, and they also have like the cloud infrastructure like Amazon does. But they have other kind of units, like they have a like a business to business transaction unit. They have a kind of reminds me of like a QVC. So it's like a streaming channel which sells products through like an infomercial style. They also have like a discount website, which Amazon actually does too. I've never bought anything from it, but I've been on there before. That business was one of their growth kind of centers that they talked about a little bit in their conference call. I can't Alibaba discount or something like that. It was actually on the previous slide. It was like Alibaba deals, I think, or something like that.
Tabo deals.
Tabo deals.
Business.
Yeah, okay, yeah, that's what it was. Yeah. So that's another unit that's kind of growing very, very quickly for them. So this is their stock price too, as well, over the last 12 months. You're talking about down 38% over the last 6 months, despite the fact that the business is doing fantastically well.
Yeah, like very well.
Yeah, exactly. I like I said, I'm in this position. I'm pretty close to my cost basis. Someone else that picked up Alibaba in the first quarter of 2021 is this guy right here, Charlie Munger, Warren Buffett's right-hand man. It would be really fascinating, would be absolutely insane, Dylan, is the 13F filings should be basically done in the next couple days for the first quarter of 2021. Is Berkshire Hathaway hasn't posted theirs yet.
Oh, they haven't?
No, they haven't.
I can do that.
I mean, that would be absolutely fascinating if Berkshire Hathaway invests some money in it, because we know Charlie did through his it was a daily Daily Journal, I think it is the newspaper that he owns. They have about $40 million in investing assets, and they opened a position in Alibaba in the first quarter of 2021.
You can check it out. Make me feel better about my investment. I think
I know.
cost average at like 222 or something.
That is right about where I am as well. Yeah. So this is that Daily Journal. This is the Daily Journal's portfolio. They're not particularly active in terms of their trading, but they did just open this position right here. 165,000 shares of Alibaba opened in the first quarter of 2021. 20% of the portfolio.
20%. Yeah, I saw that at the same time you did. Jeez.
Yeah, they're pretty heavily invested in this, and look at all these other positions: 2013, 2013, 2013, 2013.
Oh yeah, okay.
Yeah.
So they just kind of let it ride, huh?
Yep, they do. But this is a big move for them, at least in my opinion. And Charlie Munger has Warren Buffett's ear. And if anything, I think Buffett will give Munger credit for having been the brains behind the operation, and often. And then this is another gentleman who actually opened a position in Baba in the first quarter of 2021. Not sure on the pronunciation, but Mohnish Pabrai. Some people consider him the Indian Warren Buffett. He's a value-oriented investor, runs Pabrai Investments. He's like the chief investment officer there, but he opened a position in Baba in the first quarter of 2021.
He's got an amazing stash.
He does have a great stash. He's probably the best mustache on Wall Street, I would say.
Man,
yeah. This is his portfolio, very concentrated, and look at number 3 right here that he just put into the portfolio is Alibaba.
Wait, he's got 3 things and that's it?
That's 3 things. Well, 3 American long positions, because in order for 13F filings, it only has to include long positions, meaning you don't have to include shorts, and it only has to be American listed. What do you call it? Stocks, and it's only over if you have over $100 million in assets under management. So
look at his average price paid for MU.
I know, right?
$39 basically.
Yeah, that's ridiculous. I mean, Dylan and I were both in MU a couple of years ago. And neither one of us held it long enough.
I did the opposite. I bought it at 60 and sold it at 40.
Oh, okay. I think I wrote it up from like 40 to 50, but yeah, I did not hold on to them long enough. Anyways, but Alibaba just opened a position 226 right there with our cost basis as well.
That makes me feel better.
Yeah, it's pretty impressive, and this is why everyone's attracted to Alibaba right now. If you look at the last 12 months earnings per share at $8.46. Gave them a 20% annual growth rate for the next 5 years, which I think is very reasonable. They grew 24% last year. I think they can average 20% over the next 5 years. Then I gave them a 3% thereafter, which is low because if you look at the Chinese national GDP, they're averaging 5 to 6% per year. So I could arguably increase that number as well. And then I kind of gave myself a 30% confidence interval here, and that gives me a calculated share price of about $274 per share at this point in time, and I am we're well under that. We're $50 underneath that right now. Yeah, exactly.
25% below.
Yeah, and 5% discount rate. Everyone kind of does the math differently, but 5% discount rate I think is reasonable given this current environment. I'd like to see a higher return than that, but I think this is still one of the best value-oriented investments available right now. Period.
Yeah. Man.
Yeah, there's some risks, right? Like nothing is that straightforward or that cheap relative without actually having some downsides there. And the China regulatory risk, as you guys are aware, that $2.8 billion fine in the first quarter of 2021. There's still a risk of like delisting in the United States, despite the fact that Price Waterhouse Coopers is their what do you call it? Kind of accounting check corporation there, ensuring that all the books make sense. But yeah, so which is a United States company, which is one of the requirements to maintain U.S. listing. This is kind of an interesting one. It can be both a benefit and a risk. Is that half of their earnings per shares are from investments? Actually, you realize that?
Wild.
Yeah,
I did not.
Yeah, so they make money through the actual the core e-commerce, and then they're making money through cloud, but half of their earnings per share is coming from investments. they are very active in that realm. And obviously, there's downside risk if you're taking investments to that level where you're making that much money from them. You certainly are exposing yourself, but that I think that also gives them early access to some great startups. China's
Yeah.
still very much an economy that is growing. It's burgeoning, like I said, 5 to 6% or so a year of GDP growth. But they're on the ground floor looking at all these businesses getting started and taking advantage of that market position.
I don't remember the exact statistic, but I remember there's a giant percentage of the Chinese population that over the next 5 years are projected to go from low income to middle class.
Yeah, I think
Which
it
would
was in
then
excess of
more
300
consumer spending.
million people. I don't know the percent of the population, but
It's a lot.
yeah, they basically that's the entire population of the United States almost effectively. That's
Yeah,
going to be assuming a new standard of lifestyle. Yeah.
exactly. And the consumer, oh man, that can be crazy.
Yeah. Also you have the whole fact that this is a American depository receipt. It's not a direct share ownership, so people gives that a little leery, about that sort of thing. Anytime you're buying shares in a corporation that's located in the Cayman Islands, kind of makes people a little bit uneasy about things. But I have yet to kind of encounter any examples of that being a issue. ADRs are much older than people recognize. I think I was like 1913, somewhere in that ballpark. They've been around for quite a long time, better part of a century, and without any real issues. And in terms of the increasing competition, we've seen that Pinduoduo, JD are both kind of making inroads. And yeah, Alibaba has been suffering from diminishing market share, but the market itself has grown to a large degree. So I think the loss of market share is more than made up by the increasing overall size of the market. Amazon's been losing market share too, right? Because Walmart was asleep at the wheel, and now all of a sudden Walmart has a giant e-commerce business. But the fact is, Amazon's still a terrific company, and same thing with Alibaba, at least in my opinion.
Yeah, no, it's definitely it's a better value than a lot of the stocks that are out right now.
Yeah. I mean, that's basically where I'm at. Is this quarter could have been better, but I was kind of expecting that with that $2.8 billion hit that they took from the fine. But well, we'll see. I plan to be in this position for the next 3 to 5 years. Is kind of my time horizon for Alibaba to be fully recognized for the value that it demonstrates or deserves.
And I feel like a $2.8 billion fine, I know that's a lot of money, but it's not like a lot of money for them.
Yeah, they had about $50 billion in cash like in their checking account at the end of the quarter as well.
Yeah,
it's
a speeding ticket.
A rounding error, maybe.
Yeah, it's ridiculous.
All right, guys. Well, thanks for tuning in. Let us know down below in the description that kind of what you guys think about Alibaba, and if you're in this position as well.
All right, have a good one, guys.